Hey, good morning, Forex traders. I didn't hear the cue for it to start. This is Vance Williams out of Seattle, Washington. Welcome to my morning Forex trading show. It's Wednesday, December 10th. I do have a lot to cover with you this morning. I'll talk about what unfolded yesterday. I'll give you my take on fundamentals, major bank trades, and also current price movement. To see more of what I'm talking about on the show, be sure when you click the player, click be part of the conversation, and then you can actually see links that I post here. First of all, if you want to know when these shows are happening, a few minutes before they start, you can follow me on Twitter. I only send out emails about once a week, once every 10 days. I don't really favor emailing that much. And then you can go to my website if you want to get some free books and more stuff. You can go there and just show you real quick. Let me... For example, you can get my free books right here, 8 Things They Don't Tell Forex Traders. We've had tens of thousands of downloads of that. And you'll also get my first in a 3-part series called The First Battle. It's great for new traders or to, kind of check your bearings on what you've been doing. But it's really for beginners. You can also check out my training programs. Write to me if you have any questions about that. So, moving along. All right. First of all, I want to stress that what I do on this show is for your educational purposes only. That's for real. I do predict price direction and what's going to happen with extremely high accuracy, but you also have to know how to manage your risk, and you have to be trained to execute these types of decisions. So knowing which way it's going to go 95% of the time is not going to make you money. So keep that in mind. In fundamentals today, I'm often asked where I get my information. First, let me say that my experience allows me to skim a lot of information and form conclusions fairly quickly. I've been doing this for over 10 years. But that said, Dean Popplewell at Market Pulse does a great job studying the market and putting together an explanation of what's relevant today and this week. For big picture stuff, I like John Malden. I try to stay away from anything that promotes any fear, but this guy is extremely bright and well connected, and he's always looking at the global dynamics at play long term. Aside from that, I'll tune in. I'll sometimes have CNBC on in the background. I didn't turn on today, but often I will, just seeing what they're chattering about. And then sometimes I'll also look on Bloomberg.com, just for some relevant stories, about global crisis or currency movement, whatever. But the biggest part of the fundamental story right now is really the end of the year, the end of 2014. I actually, yesterday morning, I went back and kind of fast forward and zipped through a few of my shows from this time last year. And this particular week before Christmas, there were trades just like there were yesterday. Next week, things start moving unusually, especially near the end of the week. We do still have central banks in the United Kingdom and the Eurozone set to speak on the 16th and 17th. There's going to be probably a lot of anticipation of those particular days. But prior to that, there's really nothing. So the story up to now changed on the last central bank report out of the UK and Eurozone. The result was a lift for the euro and the pound. And then last Friday, there was overwhelming positive news about the U.S. economy. That was sort of unexpected, but it still falls into the category of optimism about the U.S. economy, which already had a full head of steam. So I'm going to predict that from the 19th to the 26th, we'll probably see some pretty unusual market behavior and, like Dean said, probably less liquidity available. I usually take this period off during trading all the way really to the first real business day of the new year. But I'll be around for part of the time preparing for what I think is going to be a great year for us in Forex trading. I think we're long-term US dollar bullish. Medium term, I think that's going to be up to the central bankers. They can't stop the rise of the dollar, but they can affect the timing of the rise. And this is an ongoing risk we all have to manage in order to maximize profit. Since the medium term right now is neutral, then basically we'll just be paying attention to our technicals using our accurate price logic intraday trading techniques. As far as the major banks, The top earners are being pretty conservative right now, except for one, which is looking to go long on the dollar yen if it reaches down to 118 again. This is designated as a medium-term trade. I'm not in tune with the yen enough to make a judgment on the wisdom of this during a major U.S. dollar correction, but clearly long-term they have the direction right. Also, as far as the major banks go, keep in mind that I can't verify the accuracy of the information about the major bank trades, but I do believe it to be pretty accurate. Normally I'd talk more, but they're kind of unplugging. I mean, there's some banks, north of, there's one bank in particular north of the Eurozone who just trades a lot regularly. I don't tend to comment on them. But the majors will definitely be back in action, full steam, in 2015. But if I see anything, I'll let you know. Okay, let's talk about the buyer and seller behavior that we're seeing. The first thing I want to show you is if you watched the show yesterday, and I want to pop over to the euro, you saw me on a 4-hour chart, and I had this trend line here, and price was coming. Let's see, what was it? It was about 9 a.m. So this was actually. This candle started at 8 and it didn't finish until noon. So it was still on its way up. Let me kind of go back in time here a little bit. It was about right here, right there in this spot. So it hadn't reached up there yet. But one of the things I commented on, and there's no magic to it at all, is I noticed that the big money pushes down tended to follow this channel here. And they did it again. Now, it looks like a small pushback, but if you actually measure that, that's actually 87 pips of pushback and selling from that level. So, what does that tell us? The only thing that I knew that was likely is that there was going to be a lot of selling interest right in this area. And if you were trading at that time, you just would have had to account for that. Yesterday, let's go. Right here, I've got a little mark there I put there to mark it, but there was a trade that set up during the show. And if you recall, and it was right here. It's right as I was talking during the show, there was a trade set up, and I said, it was pulling back right here, right now, and this was probably a good spot. So you can see it did that thing that we really love to see, which is you had a clear price move. It was about 24 pips. It pulls back to the 50%, 61.8 area, and then makes a second push. I think there was another trade here as it pulls back right here and pushed again. So I'm not going to go into detail on that, but if you watch my show, you know how we do that. I want to kind of clean some of this up here now. Let's see. I want to get some of this, just gets a little messy here. All right. Again, I'll come back to current price movement in just a moment. I want to go over the pound. I kind of did the same thing on the pound, although I didn't think the pound yesterday was this trend line, this lower trend line was as relevant, just because of what I know about what these guys do. But if we zoom in on that, we'll see that this is the line it was coming into right here. Now, if I put a line up on the high points, you see that it comes through, hits that one, and so there's still some selling interest right in this area. And again, those are not tiny moves. That's 54 pips pullback there. When it hit this time, it pulled back about 56. So you can see that these are popular places to sell when it's really obvious. This top one to me isn't quite as obvious, but this one here is really obvious. And when it comes into this area, it does pull back about 60 pips. So something to keep in mind for the future, especially if you're looking to manage your risk on a buy. Okay, so let me see if there's anything else I had a note to cover. No. Let's look at current price movement. So I'm going to pop out to the 30-minute chart. And let me get some 4-hour perspective. Okay, so we still haven't broken through that important level. And then we hit it, came down right off of it. Now you can see that the buyers and sellers reconcile over 30-minute periods at about 124.28. Somebody asked me yesterday, what's a key level? A key level is an important level where the buyers or sellers can gain an advantage and where there's about an even amount of buying and selling. And so just think of it like a tug of war. If they can get through here, the buyers actually have an advantage. But keep in mind, there's still going to be some selling interest in here. Now, since this trend line's come down, we'll be able to get a good feel for how strong the buyers are as they come into this level. Right now, given that there's not a major retreat of price, I have to say that, you know, this is still bearish US dollar, maybe correction territory. Look at the US dollar yen. This was a correction after a huge climb at the end. This was a correction of 396 pips. That's in just a couple of days. So pretty huge movement. And you see that if I was to zoom out a little bit, you see, again, here's the US dollar moving back the other way, 197, almost 200 pips. So keep it in mind, we're in a little bit of a correction. Now, what I see currently is price would need to move above 24.28 to consider a buy. So, and I'm talking the highly accurate type of trades where we're measuring the buyer advantage, the seller advantage in real time, measuring the strength of that advantage, and you know, it's getting in and out with precision. So that's above 24.28. Down here, it's probably, we're going to have to lower this down a little bit. You know, this is a real obvious level right here. You can see the touches here and here. So you're going to have about an equal amount. I'm going to take that fib off because it doesn't make any sense. You have an equal amount of buying and selling interest at 23.63. So as it comes through here, the sellers could start to gain an intraday advantage. So that's something to watch for. Pound, as you can see, even though there was all this selling interest, about 60 pips in both of these levels, the buyers just keep coming back. And that's always meaningful for the pound. Now, one of the things that you want to keep in mind is watch what the traders have been doing since London Open. Now, they have, by and large, it came down earlier off of this level, you know, but now they're moving up and they're pushing up. And see how it holds right at this line as it reconciles over 30 minutes, over 30 minutes, over 30 minutes. And so, and yet the buyers are still pushing. And so this is pointing to probably continued pressure to the top side. That would be in the absence of any relevant new information. Let's just pop over. So that's what you're looking for right there. It's setting up potentially right now. You need a strong move above 56.94. The bottom side, if this does dive down, you know, maybe I'll post a picture or something with an updated post. I'm just not seeing that happen. I'm seeing this potentially going. Let me just drop to the 5-minute real quick. Yeah, it looks like it's going to go right now, actually. Okay, so moving over to the Australian dollar. You know, you guys that listen to me, you know, I'm not that into these pairs for intraday trades. They just behave differently. But you've got to move above 83.52 for a buy. The sell isn't worth looking at right now. Very similar here on the Kiwi. Notice that there are sell orders in this area. People looking, and what they're looking for. These are the bigger traders that are looking for. Let me zoom out a little bit more. Got to go more. See this huge down move? This is actually looking a little bit tired to me, but nonetheless, there are people who've been making a lot of money selling the Kiwi, and so those are the traders and the investors that are parked out right in this area and all up through here. Really, there's going to be some. So that's why it's going to tend to be choppy because it's going to keep picking up those long-term sell orders. So I'm not really liking the Australian dollar and Kiwi too much. And also keep in mind that today there's a big day, a lot of information coming out. If you look at my shows or my site in the evening, forexhardwar.com, you'll see that I published something here. And all the high impact data is all out of Australia and New Zealand today. So if you trade those, you know, keep your eye on that. There's probably going to be some fireworks. Since I am on that page or was on that page, I just want to remind you again, you can get my free books here. Just name and email. And again, I only email once a week, once every 10 days. I'm really trying to move completely away from emailing. But also check out my training options. And all of this is 100% guaranteed. Write to me with any questions at all. If you have a question, anything about Forex trading, write me a question, Vance@forexartofwar.com. And we're happy to get back with you and help you with anything we can help you with. Okay, so that's it for now. You guys, thanks for tuning in. I will have another show. I'm planning another one tomorrow, so that'll be the last one of the week on Thursday. I'll do a lot of looking around to get a good read on things, both in terms of fundamentals and price. See if I can come up with something interesting as well. But for our members, I'll see you guys in about an hour in our live trading room where we'll get together and discuss what's happening. Thank you, everybody.